Folks, we are getting super close to the election, and Tom Lee is out with his election market predictions and recommended buys that you need to know in the run-up to Election Day. In today's lovely video, we are going to cover three things. Number one, current election statistics and data around previous elections and market performance. Number two, Tom Lee's latest predictions and calls, what sectors he sees doing well under each potential presidency, and what you should buy. Number three, DJT stock, Trump's Truth Social. Is it a buy? What's the deal with this? What are the outcomes for the stock based on whether Trump wins or loses this election? We're going to get right into it, but today's video is brought to you first by our absolutely free email newsletter link down below. We send out daily reports on hot ideas, catalysts, new insider trades, and more, so don't miss out. And as always, make sure to do your own due diligence on all ideas presented here on the channel. If you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. If you're going to get frisky, folks, you better be thinking about the risky. Okay, let's get into the stats here. So if you followed Tom Lee over the last few weeks, you've noticed he relies a lot on Polymarket. And if you go on Polymarket right now, you could see the betting odds have been favoring Trump more and more aggressively since the beginning of October. At the time of filming this video, we are seeing 65.3% for Trump and 34.89% for Kamala Harris. If you look at the overall picture, the odds of a Republican sweep of the presidency, the House, and the retaining of the Senate are going up dramatically as well. People with money and power and influence and interest in playing the betting market seem to think Trump will win, but the pollsters show a far more neck-and-neck race. Now, to be fair, these polls are well within the margin of error, so they are basically declaring this race a toss-up. And I don't know in general how much I trust the polls. In many ways, polls are the horoscopes of politics, entertaining to read, super annoying to talk about on first dates, and at the end of the day, pretty damn pointless. Betting odds, in my view, are probably at least a bit better, if not a lot better. That's because they don't just capture sample population opinions, but they are an open market that counts for the real-time likelihoods of voter turnouts in certain key areas. It reduces social desirability bias because you can bet on whoever you think will win instead of whoever you personally support, and it can react a lot more quickly to breaking news and influential events. It's also true that those that have a lot of money and those that are betting a lot of money on these odds probably also have some deeper, more confidential information. However, bigger picture, I don't think that these people are in the business of losing money, so I would say the betting odds are probably better and more reliable than the pollsters. Okay, so Tom Lee's Fund Strat puts out this chart, and it shows the sectors that move favorably when Trump or Kamala has taken the betting odds lead since the beginning of August 2024. With Trump, it shows regional banks, Bitcoin, financials, materials, the Russell 2000 Small Cap Index, staples, and real estate doing well. And then discretionary, utilities, healthcare, industrials, technology, communication services, and energy going down. Where with Kamala, you're seeing communication services, energy, technology, industrials, healthcare, utilities, and discretionary going up, and the opposite of Trump's going down. So how do you explain this? Well, you see, markets are assuming that Trump winning is associated with the financial sector making a ton more money with lower interest rates and stimulus and less regulation. And they expect more building to prop up materials, and they expect small caps to go parabolic, as Republican presidencies tend to be more bullish for small caps as compared to Democratic ones. That has to do with a few factors which we'll discuss a little bit later on in the video, whereas on the other hand, with Vice President Harris, they expect the sectors that have done well under Biden, like energy, which had an unprecedented price increase, healthcare, which had an unprecedented price increase, utilities and discretionary, which also had unprecedented price increases, to do well. And of course, they also expect big tech to continue to do well, and that is another area which has largely been insulated by the inflation crisis and the high interest rates. These companies are just so powerful that they tend to outperform even when there's a lot of issues in the overall economy. The high rates that we saw the last couple of years put out a lot of big tech small competitors and allowed big tech to dramatically consolidate market share. Now, that being said, it is pretty likely that if we had another 4 years of a Democratic president, we would see a lot of lawsuits, antitrust lawsuits hurled at them. So that is something to keep in mind. That might hurt their valuations, especially for Alphabet. Now, that said, this is all just data, and Tom Lee doesn't want you to shoot the messenger of said data. He's gotten a lot of slack for posting the Polymarket odds and commenting on it because it shows Trump in the lead and tends to paint a bad picture for Harris. He said this: "By the way, we continue to receive a lot of criticism for our commentary around elections. We are not rooting for one candidate or the other, but we are highlighting the changing probabilities and the related impact on sectors. This is not partisan analysis, and if one feels this way, this reminds me of the old adage, Amateurs want to be right, professionals want to make money. Now, this, I believe, is the right way to look at it. Whether you support the vice president or the former president, that's neither here nor there. You're welcome here on the channel, regardless of your political opinions, of course, but more importantly, the market doesn't care about your political opinions. Your goal is to gauge what other people expect is going to happen, because that's going to gauge the performance of the stock market, and that's going to gauge the performance of your account. So, then he goes on and says, given the movement in polls, there are sectoral implications. And as we noted, the following are positively leveraged to a Trump victory. Small cap symbolized by the indices IWM and IJM, cyclical symbolized by the indices XLF, KRE, and XLI, Bitcoin symbolized by Bitcoin itself, MSTR for MicroStrategy, SMLR as well. Now let's start with the small caps here. So why does Tom Lee think Trump will be good for small caps? Well, for starters, small cap companies are typically more US-centric in their revenue sources than large multinational corporations. Trump's policies, at least his proposed policies, which emphasize domestic growth and protectionism, might boost small businesses that are less reliant on international markets, thus favoring them. Secondly, Trump has historically supported corporate tax cuts, which can disproportionately benefit small caps. Smaller companies often face higher effective tax rates than larger corporations with complex tax structures. Tax cuts would increase their profitability and free up cash for reinvestment or expansion. Thirdly, deregulation. Trump's administration is known for rolling back regulations, which can reduce compliance costs and administrative burdens on smaller businesses that may struggle with the resources required to navigate complex regulatory landscapes. Fourthly, infrastructure spending. Small cap stocks in sectors like construction, industrials, and materials could benefit from an infrastructure bill, a priority in Trump's economic plans. Small cap companies often play a significant role in local infrastructure projects and stand to gain from increased government spending in this area. And fifthly, potential for economic growth. Trump's policies are typically more growth-focused, aiming to stimulate domestic economic activity specifically. That the fact of the matter is that if you put somebody into office that's going to put tons and tons of emphasis on deregulation, cutting taxes at the same time as putting somebody in the Federal Reserve that's an extreme dove on interest rates and probably spending tons and tons of money to further stimulate the economy, well, you put all of those together and you're likely going to get some form of economic growth, if not quite a lot. And small caps being more sensitive to U.S. economic growth and interest rates would likely see increased revenues and improved performance as a result of these policies that stimulate the economy. And of course, those are things that we did see during Trump's first term. Now, what about the cyclicals? Why exactly does Lee think these will do well under Trump? The cyclicals here include financials, regional banks, and industrials. Well, quite frankly, these would also do very well under corporate tax cuts, more deregulation, and infrastructure spending. Cyclical stocks, like financials and industrials, perform very well when the economy is in a growth phase, as demand for loans, investments, and construction rises. Trump's approach to financial deregulation could reduce compliance costs for banks, especially regional ones, symbolized by KRE, allowing them to lend more freely and boost profitability. Regional banks often face tighter regulatory constraints than large financial institutions, so regulatory relief would be particularly impactful for KRE. Pro-business policies might stimulate demand for commercial loans, which benefits both large banks and regional banks. Regional banks, though, in particular, are more closely tied to local businesses and could see a significant boost in loan activity, again, which is why he highlighted KRE. Now, in terms of industrial, signified by XLI, well, increased infrastructure spending is likely the culprit. Trump has consistently advocated for infrastructure spending, which could directly benefit industrials, especially those focused on construction, equipment, and materials. Companies within XLI would be well positioned to gain from government-funded infrastructure projects. Trump's focus on domestic manufacturing could benefit companies involved in construction, machinery, and other industrial production. This is particularly true if trade policies incentivize manufacturing within the U.S. or place tariffs on foreign-produced goods, thus driving demand for American-made industrial products. Tom Lee is also probably expecting higher capital expenditures. With reduced taxes and regulatory constraints, companies are more likely to increase CapEx, benefiting the industrial sector that supplies, again, equipment, machinery, and building materials, all of which are very, very capital X heavy. What about Bitcoin, the coin of bit? Well, Bitcoin is often considered a hedge against inflation and economic instability. Trump has been very, very outspoken on Bitcoin and his goal to make the U.S. the leading player for cryptocurrency overall. But if Trump gets into office and he has an open mind towards the industry and appoints people to run the SEC that aren't violent towards the sector, well, that can make a whirlwind of difference. Right now, the cryptocurrency industry has to succeed despite the federal government's oppression of it. But with Trump, it looks like they're going to have a major ally. Regulatory leniency under Trump could allow institutions to feel more comfortable with Bitcoin as an investment asset, potentially boosting its value by quite a lot. Now I have some interesting stats for you in regards to elections overall. Let's go through some of these. So on average, the S&P 500 gained 0.7% the day after election day as uncertainty drops and investors respond positively to a clear outcome. Now, this has been the case historically. Are we going to get a clear outcome this year? Well, there's some indications that it might take a few days, even a few weeks. And that kind of uncertainty could delay this market performance boost and this after election day gain. But will that happen eventually? Probably. Post-election year-end rally, the stock market has ended higher in 83% of election years since 1928, regardless of who wins. This relief rally comes as market focus shifts to economic fundamentals. Again, this is assuming that there is a clear outcome and there's not a massive protest or contesting of this election, which quite frankly, in order for that to happen, you're probably going to need a landslide for one candidate or the other. Post-election day bounce in stocks. Clear election day result leads to a 5% rally in the S&P 500 on average over the following 3 months, driven by, again, reduced uncertainty. Markets love certainty. When uncertainty hits markets, markets go down. When certainty comes back, markets rebake that premium in. You pay a reduced price if you are willing to deal with uncertainty, and you pay a bigger price if you don't want to deal with that uncertainty. What about S&P 500 performance when a new party is in office? Well, when the White House changes parties, the S&P 500 historically declines by 2.5% in the 3 months post-election as investors adjust to potential policy shifts and uncertainty around policy shifts. Now, if Trump gets back into office, that is a unique situation because, quite frankly, he was already president for 4 years. We already have a taste of his policies, and I think he's been pretty clear on what he wants to do. So it's yet to be seen how that would impact markets. I would think it would go up. I think that a lot of these things, tax cuts, deregulation, I would think a lot of those would result in increased prices. Now, what about market returns when the election is contested? Well, in contested elections like the year 2000, the S&P 500 fell by 4% in the month after election day due to the prolonged uncertainty. Could that happen again? Certainly. I think that might be likely to happen again. What about defensive stocks post-election? Well, defensive sectors like utilities and consumer staples tend to rise by 3 to 5% post-election as investors seek stability during political transitions. What about the VIX, the volatility index? Well, the VIX volatility index typically spikes by 20% in the month leading up to the election and then stabilizes after a clear outcome. If you look at the chart of the VIX, it looks like that might be set to happen again. And if the VIX does indeed stabilize and we don't have a contested election, well, you could see stocks rally quite a lot and the VIX dump like a dog. What about the tech sector? Well, the technology sector has averaged a 6% gain in the 3 months post-election as it's often viewed as resilient to political change. What about bond yields? Well, bond yields often fall in the month after an election as investors seek safer assets during economic policy shifts. What about financial stocks? Well, financial stocks average a 3% gain after Republicans win and a 1% under Democrats as financials favor more pro-business deregulatory policies. What about small cap stock performance? Well, small cap stocks tend to outperform large caps in the 6 months after an election with a 10% average gain due to their domestic focus. Now, in terms of tax policy, well, markets can decline by up to 3% after elections where corporate tax hikes are proposed as investors factor in potential profit impacts. This is the case with VP Harris, who wants to get rid of the Trump tax cuts and also raise taxes on corporations even further. What about cash inflows? Well, equity inflows tend to rise by 15% post-election when results are decisive, as investors re-enter the market with a clear economic outlook. Okay, now it's time to talk DJT stock, the parent company of Truth Social. Truth Social is, of course, Trump's social media platform, and it's actually become a sizable amount of his net worth. He apparently owns some 57% of the shares, which means at the current market cap, he's got some $3-4 billion plus in equity there. But why is DJT stock running? Well, here's what's fueling that momentum. Number one, political speculation. With Trump gaining traction in polls and betting markets, many investors believe Truth Social could explode in popularity if he wins. DJT stock often benefits from this political speculation as people anticipate higher engagement on Truth Social. Number two, increased user activity on the app. Truth Social is seeing more user engagement heading into this election, especially as Trump's activity increases. If the platform continues to gain traction, it could drive interest in DJT as a unique media asset. Number three, Trump's media influence. Truth Social has become Trump's direct line to his followers, and DJT is essentially a bet on his influence. As long as Trump remains active and relevant, this stock could continue to capture attention from investors betting on his brand. Now let's take a look at what might happen to DJT stock depending on the election results. We have two big scenarios to consider here. Scenario one, Trump wins the election. If Trump wins, platform exposure could skyrocket, as President Trump could use Truth Social as a direct communication tool, driving more users and advertisers to the platform. This exposure could cement Truth Social as a player in the social media space for at least 4 more years. With Trump in the Oval Office, well, DJT stock will have a built-in base of people that have to follow it in order to keep up with the president. Scenario 2, Trump loses the election. If Trump loses, DJT could see a massive dump as investors gauge whether the platform can maintain its relevance. So at the end of the day, DJT is really a stock that represents Trump's brand power. Right now, it's trending up heading into the election, and if he wins, it'll likely continue staying relevant, but if he loses, big rug pull. I would see DJT as sort of a pseudo probability betting area. Right now, it's trending up heading into the election, and if he wins, it'll continue staying relevant, but if he loses, big rug pull. Anyways, folks, that caps off today's video, and by the way, for the fellow Americans watching this, make sure to go out and vote, whether you're for the former president or the VP. It's important to make your voice heard. It's like the bare minimum you can do for your country. I myself have voted in every election since I was able to, and I just want to encourage you to do so as well. Anyways, have a good one, and we'll see you next time.